Stock markets are down a little bit today, about 1:30 Eastern Standard Time. While I'm recording this, crypto and Bitcoin continue to kind of hold in the range. So let's take a look at what's going on in the news. Cathie Wood was out today saying that the U.S. is already in recession. She's worried about deflation, talking about inventory levels. Target, Walmart, all of the big producers out there are having difficulty, or retailers are having difficulty managing inventories because consumer sentiment is so low at record levels. Even the highest income earners have lower sentiment on the economy than the lower income earners. And people are just really, concerned about inflation, and rightfully so, with the way energy prices have gone, fuel prices, food prices. Even people with means are concerned about the economy and concerned about where things are going. And then, of course, we have the Fed still denying that a recession is not a base case or not in the cards. We all know that we're probably already in a recession. We covered that yesterday in terms of negative growth and what that really means. So, Fed, politicians, some economists are in denial, whereas when you talk to business CEOs, entrepreneurs, people that are in the real economy, you and me, we all know that recession is a real thing. Inflation is a big problem. And we're probably going to see, another big, inflation print come out for June, which is coming out July 13th, will be the June inflation readings. So we'll have to wait to see, what happens there. And what we're looking at in crypto news, we've been talking about miners and, miners capitulating, and they haven't gotten there yet. Miners are selling, obviously they sold, a lot of them sold all of their earnings last month to stay afloat. But reports are that Compass Mining has lost their main facility after failing to pay the power bill. Troubles at crypto mining firm Compass Mining as it reportedly fails to pay its power bills. FTX's Sam Bankman-Fried denies rumors that it will acquire Robinhood. So that was a big one yesterday, that everybody was saying Sam Bankman-Fried was going to acquire Robinhood. Robinhood bounced about 20% on the news and then turned around and retreated once they realized that was just a rumor and just talks, and somebody let the cat out of the bag a little bit early. Another big news article here, the SEC's Gary Gensler came out yesterday. A lot of people are saying that he called Bitcoin a commodity and that he said Bitcoin was a commodity. And what he said actually was that some like Bitcoin, and that's the only one I'm going to say, because I'm not going to talk about any of the other tokens that my predecessors and others have said are a commodity. Some like Bitcoin, and that's the only one he's going to talk about, are a commodity. So he's not saying Bitcoin is a commodity. He says it's the only thing he's willing to call a commodity right now. He said crypto financial assets have the key attributes of a security. He recently noted that there's almost always a centralized entity that directs projects and stands for the profit the most. So still in the process of trying to clarify what these assets are, how they're going to be managed, who's going to regulate them, and the disclosures that are going to be required for that, which again is what you need for the space to grow. So Bitcoin probably will end up under the CFTC as a commodity, whereas all the other assets will probably end up as securities, including stable coins. They'll be more like banks. CFTC, kind of the banks fall into the CFTC's purview, I believe. And, there's reserve requirements and auditing and real transparency, as we talked about with Tether. Refusing to be transparent just creates, more and more trouble for the space and speculation and potential for bad things to happen. So, it's all about the regulation. Everybody wants a spot Bitcoin ETF, which we know will bring a lot of at least immediate price action. The SEC more than likely will not approve one of those anytime soon until we get more regulation, more clarity in terms of who's going to regulate what, who's going to be responsible for what. So there's always talk out there about a Bitcoin ETF, Bitcoin spot ETF, spot Bitcoin ETF, but I don't think you're going to see that happen anytime soon. And one of the things that the regulators, SEC, are citing over and over and over are Tether, and the fact that Tether will not release transparent audits. So until that stuff gets resolved, we have to continue on with status quo. So Let's take a look at where Bitcoin is continuing to range. Of course, the markets are down today. Dow Jones is down about 1%, S&P 1.3, NASDAQ down 2%. So retreating from recent highs, and we'll see what the momentum into the close looks like. I expect it to be down into the close, opened relatively flat, sold off in the afternoon because of consumer sentiment, other inflation pressure potential that's coming. And we'll take a look at what happened in the past, leading up to these inflation reports, May 11th, June 10th, and then we have one coming in July 13th. And if you go back into the charts here and you take a look at, this is Bitcoin, and if you look at May, March, April, May, right in this area, this was the market getting ready for bad inflation reports. And then when the Fed, obviously takes action and raises rates, markets kind of stabilize and bounce a little bit, and then it unwinds, getting ready for the next move. So these moves, as we've been tracking, most recently have been about, well, that was a 35% drop from peak to wick. This one was a 40% drop from peak to wick, somewhere around there. So that's what we can expect to see on the next round. These little screens get caught up here. Yeah, that was about 40%. So what happens if Bitcoin falls another 35 to 40% from here on the next inflation situation? What does that look like? 13, 14,000, right? So there's a lot of technical confluence pointing at those levels. If you've been watching some of the analysts out there in the space, and I am no technical analyst, I use the charts to kind of, monitor the levels, watch price action ahead of, in response to inflation prints, ahead of what the Fed does. And, in contrast to the markets, right? And a lot of times the markets will lead Bitcoin, where the markets will make the big moves and then Bitcoin will follow. But we've been talking about the markets here. I know a lot of people are looking for the bottom, calling this a bottom, saying that we're going to get these huge, rallies and relief rallies and things like that. And we've had them. I mean, these are relief rallies. This was the Do Kwon. And, here's the thing here. In order for this market to reverse, number one, you need inflation under control so the Fed can back off. The Fed is not going to back off. They're not going to retreat. They're not going to reverse. Some people are, calling for that, begging for that. If you're Cathie Woods and some of these funds out there, begging for the Fed to reverse course. They're not going to until inflation is down, because they can't. That will do more damage than anything else they could possibly do, unless the market just, completely melts down. Then they'll probably do some other things. But until then, they have to keep raising rates. They have to keep, quantitative tightening on. They have to keep going. And, until the Fed retreats, all of those previous market participants that were buying in quantity, the investment funds, GBTC, Michael Saylor, Do Kwon, that's what was propping the price up and making these big moves. They're out of the game. Michael Saylor cannot borrow any more money. He's leveraged to the hilt. A lot of the hedge funds, investment funds, DeFis that we're buying, they're all leveraged to the hilt and losing. The miners, as we know, that some of them were buying, they're all leveraged to the hilt and bleeding. And on that topic, let's take a look at the hash rate indicator. This is the Bitcoin hash ribbon indicator right here, and you can see the hash rate still kind of, heading down a little bit because mining has become, unprofitable right now. So they're having to turn the rigs off and sell some of their holdings. We still have not reached panic, still have not reached capitulation. We're just, market's just ranging right now in anticipation of the next inflation print. We have a holiday weekend coming up, but as you can see, this was the June timeframe leading up into the June 10th inflation right in this area here. Looks kind of like where we're at right now. That was everything, in advance of the inflation report. It came out on the 10th. The market dropped. Then it dropped, on the news when it came out. Let's look at that. It's 30%. So kind of what we were looking at, that $14,000, $15,000 level. And as we said, a lot of people are looking for the bottom here, expecting a relief rally. This was a nice relief rally in this, bear flag here. And these aren't bad relief rallies that we're experiencing right here as we go along. A lot of people just aren't counting this. I mean, but for Bitcoin, that was a 27% move in a few days. And this move here recently was about a 20%, 24% move. So, I mean, there's your relief rallies right there. I know a lot of people are wanting these huge moves like this one, somewhere around, 45%. But again, that was the Do Kwon thing happening right there. So we don't have those buyers. They're all getting wiped out. All the DeFi, protocols and crypto lenders out there, they're just non-existent, and they're not going to be able to raise capital to keep buying and propping the price up, especially as it continues to drop. So it's just a deleveraging, just an unwinding. and it's going to have to take its course and run its course. So let's take a look at the S&P. Same thing here. A lot of people are calling for this to be a bottom, saying that market's going to reverse, and looking for that rally. And there's 8% right there. The S&P is very predictable on these bounces. That's 7%, basically. 7 to 9% is what we've been seeing in the S&P on these nice little bounces here from wick to wick. That was the biggest one there at 11%. Then you had a couple little relief rallies here, bounces, in the 5-6% range. This last one here, that was 9%. This current bounce that we've been working on right here in the S&P, that's 8.5%. So, I mean, that's what a bear market looks like, right? You get these little relief rally bounces as price continues to slowly unwind. And then eventually, if something breaks, you can get a final capitulation and shake out to kind of get rid of all of the leverage and speculation. And, what's going on here the last few days, end of the month, end of the quarter, a lot of rebalancing, things like that going into the second half of the year. We have earnings come out. So we're down in anticipation of some weak earnings, in anticipation of more inflationary environment, things like that. So let's take a look at, let's see what the dollar's doing. Dollar's kind of, bouncing around, ranging back up a little bit. Oil has bounced a little bit. There are some calls that oil is going to go back to these all-time highs at 150 a barrel. There's some people saying we'll see 60 a barrel. So, nobody really knows what's exactly going to happen in some of these things. And there's still a lot of uncertainty in the war in Ukraine, a lot of potential for escalation there. Let's take a look at Bitcoin dominance. This is a big one here. Bitcoin dominance has been falling, and the altcoins have been, rallying lately. And one of the reasons is when you look at the altcoins, Ethereum had a nice little bounce, 20-something%. Let's take a look at that. That bounce there. It's about 45%. So Ethereum had a 45% bounce. A couple of the other altcoins did too, because the lower the price goes, the higher they're going to bounce percentage-wise, because it's, takes less capital and it's much easier, and you get bigger knee-jerk reactions. So the altcoins are going to show nice big bounces. That's one of the reasons Bitcoin dominance is down so much, because a lot of the capital is, as Bitcoin weakens, is flowing into the altcoins. They get these bigger bounces because it's less capital required to do it. Prices are cheaper, so they can bounce higher, faster. Avalanche didn't have such a great bounce. Avalanche bounced about, 60%. So that's not too bad. So some of these are bigger than even I was thinking about. That was Avalanche 60%, 62%. So, I mean, these are nice little bear market rallies right here. A lot of people are saying we haven't seen any bear market rallies, but I mean, that's some big bounces we had along the way here in some of these altcoins, and that's 80% right there. So these are the areas where you can get some nice little gains, but you got to be careful. You got to catch them in the right spot. Ape, I think, bounced about 50-60% as well. Ape bounced at 76%. So the altcoins are showing some nice little bounces here and there. So that's why the Bitcoin dominance has been down, because a lot of the capital's in the altcoins, because there's quicker, easier, bigger gains to be made there. Let's take a look at Bitcoin on the hourly. Continuing to range, rolling over a bit, but still continuing to range, kind of like it did right in this area. This was more of a sideways, whereas Bitcoin is kind of arched over here a little bit. I know a lot of people were looking for this head and shoulders to play out, or what they were calling a head and shoulders, with potentially a head here, or a shoulder there, a head here, shoulder here, looking for that whole thing to play out. That didn't happen. Again, we are in a ranging market, awaiting inflation reports to direct the Fed. The markets are leading the Fed. The Fed is not leading the markets. So until inflation's under control, the Fed can reverse course. And we see some more clarity from a regulatory standpoint. You can't really expect anything to come in and reverse this market like we've seen in the past, because that capital is just not available. Too many people have lost too much money, and it takes time to recoup that, and for price to recover, and for people to, new capital to come back into the space, because everybody is kind of leery right now. A lot of people are leery because of everything that's happened here in the recent past. So these are the things I'm looking at today. I will see you on the next video.